The currency markets, which is really the focus of the day, with the rupee gaining traction for the third straight day.
Yes, a third straight day of gain, 0.5% on the higher side. It's a fresh 1 week highs coming in for the currency there. While the currency has been inching up, you also have seen the bond yields going higher because of the high inflation concerns. So there is no respite really coming in for that. But coming back to currency, you are looking at dollar selling by foreign banks. Instead of rolling over their long positions into the next month, they are winding up their positions, and that's the reason you have seen support coming in for the currency. Apart from that, it's the crude oil prices trading the lowest in 3 months that has been improving the sentiment. You also have seen inflows coming in, not just in sense in the equity markets and the debt market, but also via the way of FCNR and bank foreign currency borrowings. That has been supportive as well. Take a look at the US 10-year yielding number, and that is at lowest in 1 month, and that also has been supportive for most of the emerging market currencies. So you have these currencies also turning around. Nearly 0.25% to 0.5% on the higher side is how most of the Asian emerging currencies are trading at this point in time. But having said that, there are reports in the last 24 hours which have come in from CLSA, also from Standard Chartered, and they are saying that the emerging market currencies are vulnerable in light of the Fed tapering that is expected to start in this year itself. While the near term is looking supportive for the currencies, CLSA and StanC both say that 66 to 69 is the kind of level that they see 2013 ending on.
Let's get in the treasurer of FirstRand Bank, Kanhaiya. He joins us right now on the show to speak about the currency, the bond yields and lots more. Hari, good having you as always. Thanks so much for taking the time out. Pleased with the strength of the currency, and is there more to go to your mind?
Yeah, I think the strength that you're seeing right now in the dollar rupee or the rupee, I think it's got more legs. I think it'll continue to grow, and I think it's based on some fundamentals which are clearly local and therefore sustainable. I think the first and foremost is the trade numbers, the trade gap as we call it. I think that's sustainably come down from those $19-20 billion per month to the $10 to $12 billion. And last month we saw a print of 10.91. We expect the print to remain in the very low double digits, or probably even test the single digit number. So that's one very good thing. And the two windows that were open, one for the FCNRB and one for the head office borrowings or for the correspondent bank borrowings, I think that's going to bring in a lot of money. And the small tweak that they did, where they permitted banks to borrow an extra 50% earlier, only for a 3-year tenor, that was fine. There was a technical problem there because banks could not hedge it for 3 years. But the latest amendment they have done, where they're permitted it to be borrowed for 1 year, I think that's going to get in a large amount of supplies into the market, in particular because the money market remains tight. And the FI turning positive, I think that's again a big plus, because after 4 months in a trot, we're seeing about 7,000 crores, 8,000 crores net plus in the marketplace. So I think local sentiment clearly positive, and there is a lot of sustainability there. So our sense is it'll probably head towards 60, but not necessarily below that to a large extent, because you still need to see large amount of exporters selling. And that will only happen when you have a clear view from the overseas market. Talking of the overseas market, I think the QE3 continues to play on the markets, though the last speech by the Fed governor was very clear. It's whatever action is going to be data dependent, and he's given the barometers or whatever you want to call it as 6.5% unemployment, and they're far away from that. But even if they do that, it is contingent on I think the budget standoff getting resolved by Tuesday, when the new fiscal starts in the US, and more importantly the debt ceiling on October the 17th. And I'm not too sure until they resolve these two, would they want a third issue in starting a taper and creating a bit of a crisis. And the final one is, of course, they still haven't named the new Fed governor. If it is indeed Ms. Yellen, then of course the market expects a continuation of the dovish policy. So either a no change looking at the housing stats, or probably a small tinker, and that should be pro-emerging markets overall. But as Manisha mentioned, there is a little bit of disquiet which has emerged in the markets, despite the fact that the US interest rates are low at 2.65, which is almost excepting the rupee, all emerging markets seem to have given up a little bit of their gains. But I would still believe that there is a lot of legs to the emerging market currency rally.
Hari, just wanted to talk about what your estimates are for the current account deficit numbers on account of the way the rupee has panned out.
Well, we've heard two numbers. One is the earlier number where the finance minister was mentioning that he would look at $70-odd billion. And of course, yesterday we heard another estimate which could be as low as $50 billion. Right now, the markets would rather go with the $70 billion and believe that that's eminently achievable considering the current run rate. And this run rate, if it continues for 7-8 months in the full year, I think we're easily going to achieve that number, aided by two other factors, which is that technology exports to a slightly resurgent US and the European economy. I think they've been on a good trot, and NRI remittances have been very, very powerful. So I think looking at all of this, I would still bet on a more $60-70 billion number. The caveat is, of course, that we don't resume gold imports. If gold imports are resumed, then we could have a little bit of a problem coming back. But I don't think that there is any more on that trot. So I would go with a number of 60 to 70 billion current account deficit, and that should be Rupee supportive.
One, also, how do you expect the fund flow situation to continue from the overseas market? You mentioned about some positive numbers that have come in from the FI side. Now, would you put this squarely on the tapering postponement that has been done? And if so, would the flows into the Indian debt markets continue? Because the yields don't really show too much of a flow as of now. Can that improve in the month ahead?
Interesting question. I think if you look at how the FI money came in, I think they came in the early part of the month when the rupee was actually weaker, and the stock markets had got a bit battered. And towards the latter part of the month, we actually have seen a debt sell-off. So if I were to project this going forward, I think it's interesting because the debt markets, what has happened is the debt yields have come down from the highs. So from being 10.5%, 11% for commercial paper and for debentures, the yields have come down quite a bit. Strangely, on the other hand, when the rupee has actually strengthened, the forward premiums have actually gone up from the 4.8 or 4 rupees and 80 paisa odd for 1 year to 520 yesterday and about 515 today. So with the forward premiums having gone up and the interest rates having gone down, it's not so attractive a market for FIs in the debt market, which is why even yesterday you saw a report of more than 200 million US dollars of debt selling. On the stock markets, it's a different call because some say the markets are quite adequately priced, not overpriced. And the future will actually depend on how we see the whole emerging market pack being looked at, how the liquidity flow from the QE3 is, and more importantly, what the GDP growth rate projections are, because we've probably seen 2 quarters of tightness, including the current quarter. And if the tightness in the liquidity situation continues, then it could impact the GDP growth rate and therefore corporate earning projections. So I'm not too sure whether the FI flows will continue to be that buoyant, but I think they'll be more than offset by anything from 10 to 20 billion dollars coming in from, say, FCNRB and the borrowings by banks, as well as the robust remittances coming in from NRIs and the technology exports.
One quick word on the domestic side, Hari, and that's really related to the liquidity situation currently. Now, while the RBI governor said that with MSF going down, the liquidity situation would improve, yesterday the Economic Times also reported, and our channel checks with exporters suggested that banks have even stopped discounting LCs. I mean, liquidity is that tight, and this is being done by the largest PSU bank in the country. So I'm sure the smaller ones are also doing that. How bad do you think the situation is, and for how long can it remain like that?
Well, it's been a very, very tight situation. So, not that the market has been in a surplus mode at all. So almost for 18 odd months, we've been in a deficit mode. But I think currently what's happened is a market which is long about 5 to 6 lakh crore of surplus SLR suddenly finds that it can only discount 40,000 crores in the LAF window and 2% of its DTL, which is roughly about 1,50,000 crores in the MSF window. So it is not just a rate. I think the rate coming down has been a big relief. So it's not 10 quarter, it's 9.5, 960. So that's good. But the total amount of surplus that the market has to, rediscount with the Reserve Bank of India over and above what it is currently doing probably is only about 40,000 crores. Now that's pretty small change considering that we're talking of a 75 lakh crore system. So I think the market's keenly looking forward to liquidity coming in. Now, we could have seen an expansion of the MSF window, if not the LAF window, in terms of more eligibility. But I think there could have been a pattern behind the whole thing that if the call money comes down very low and liquidity gets awash, then would the FCNRB and the overseas borrowing product be that attractive? So maybe there'll be a calibration that we'll probably watch in October, how much of that money comes in. So if the market estimates of $20 billion actually fructify, we could see a 1,25,000 crores of surplus liquidity coming in after the swap is done with the Reserve Bank of India. So my sense is they'll calibrate the MSF window or the LAF window increase, which is key for liquidity, while tracking the amount of money that's offered to them on the LAF window. And of course, the OMO window continues to remain open for them, and that can always be tinkered around it. But the OMO window will more play around with the yields and not necessarily with the liquidity.
Hari, thanks very much for joining in on the show and giving us your perspective on all of the crucial macroeconomic data slated next week.